as we're moving into this third-party reporting regime, this will be further complicated by some implementation challenges that are sort of, built into the structure of the market and tax reporting right now. So, the first one being the coverage gaps that exist. Right now, Form 1099-DA only covers custodial environments. So your exchanges, for instance, will be reporting, but a transaction that takes place in a non-custodial wallet across a decentralized exchange will not be reported. But taxpayers are still responsible for reporting this activity. So it's not only imperative that taxpayers do their self-accounting, reconcile it with the 1099-DAs and report that, but they also need to be aware that, part of what they're accounting for will be reflected on their 1099-DAs. But if they have transactions that are taking place in non-custodial environments across DEXs, then that's not going to be reported on a 1099-DA, and it still has to be reported for tax purposes. So, this is a year where there's a real risk that a taxpayer can underreport and overreport their taxes in the same year when it comes to digital assets. And how would that happen? Well, they, in a scenario where you get a 1099-DA and it's not reporting your basis and you blindly report that 1099-DA for tax purposes, that would lead to you overstating your gains most likely because your basis and holding period aren't considered. And then similarly, if you're just blindly reporting this 1099-DA and you're not reporting your DEX activity because you're thinking to yourself it's not on there, or maybe it's in there, I don't see how it's calculated, then that would be underreporting that activity.